Hi, I'm Peter Rose, founder of Longwood Currency Trading. Don't break your Forex trading rules. Oh boy, I broke one today, and so I'm outside and just kind of enjoying the spring day. It's late April of 2025, and Sue's daffodils, I don't know if you can see these, we should go on a tour of the daffodils, are coming up. And we have them here. You can hear the birds chirping in the background. They're happy. Coming out of a pretty cold winter. And so having days that are 55, 60, geez, the other day we had 68 degrees. So it was really nice to be outside. But it takes time in order for the seasons to change. One of the rules that I follow in my Forex trading is don't get excited, don't get over optimistic about the market or creating anticipatory trades so that you are pushing to make money. It takes time. You have to wait until the price action sets itself up to whatever rules or conditions that you've established for yourself, and then you go ahead and take your trade and you watch it and monitor it and all that other kind of good stuff. But that takes time. You have to watch out stepping down the stairs there. Yeah, had my left hip replaced about 5 months ago, so I have to take it easy, or I could twist it. It's strong. I had a video of me running around out here in the backyard the other day, playing some 15 seconds of soccer with my granddaughter until she got bored and ran up the hill. She got bored because the action wasn't happening fast enough for her. We get bored. I get bored. I don't know about you, but I get bored sitting around looking at the trading screen and wondering when that price action is going to manifest itself into a situation where the conditions of my rules say go in, and also for the number of pips that the trade is going to be able to provide for me. In any event, I'm looking at this thing. I didn't go in right away. Took a shower, and I took the bow dog out for a walk in the woods, and did about a mile, and was thinking about other stuff. I'm working on a computer program right now, but came back, and the price was still basically doing what it was doing, but it was indicating that what I thought would happen should go ahead and happen. And so I got into the trade, and I'm managing it. I had an expectation of where I thought the position could go to, and I'm just sitting there watching it, and it was moving in that direction, and I got tired of waiting for it, and I wasn't sure that it wasn't going to flip around. I didn't have that many pips accumulated, but I was afraid that we were going to just turn around and it was going to go past my take point, and I'd get out with a loss for the day, and so I wasn't really interested in that. And regardless, I cut it and closed out the position, and then went and started up a batch of French press coffee that is just finishing up, thinking about giving me a good cup of coffee right now. So I'm going to get back in there. But I went back in and took a look at that price action that was going on after I had got out of the trade. I got out with a 0.3% gain on the trade. Well, if I would have stayed in the trade, I would have had an 0.8 gain, and a clear indication of a chatter starting around about 1.2% profit, and I probably would have got out. I probably would have got 0.9% out of that. Well, Peter, why did you only get 0.3%? It's because I didn't follow my rules. My rules say that under these conditions, the expectation is this, and you stay with the trade as long as it's in profit until it proves itself otherwise. It hadn't proved itself otherwise. I just got fucking bored sitting there stewing over the fact that it could go south on me, so I took my 3/10. I don't regret that because, look, if you can make 3/10 on your bank a day, I mean, that's 3 pips 1,000, okay, of risk. You know, it's $3 on a $1,000 account, trading a mini. It's $30 on a full lot, $300 on a 10. So 0.3% is nothing to puke about. But when you're thinking in terms of pips instead of dollars, the dollars don't factor in. It's just the pips. So say, I'm happy to get the 0.3%, even though my analysis said I should stay with this thing. My profit target was, well, if you've watched my channel, then you know how I define profit targets. They're not actually what I'm looking to get. There's something else. But my profit target was probably 13, 15. It was, yes, it was a little tight for my normal 20 to 25, but I didn't want to really trade very long. I had got back in, like I said, from walking bow. So it was later in the morning when the price action for the major pair that I'm trading has started to slow down. I'm sitting here on the East Coast of the United States. So, you know, later in the morning, things are starting to wind down. So the expectation is it's gone pretty much where it's going to go until otherwise challenged. You know, something radical goes on with the stock market, or somebody comes out with an economic announcement or something, and then then you're going to get some action. But because I didn't follow the rule or the condition of the rule, I mean, the rules are based on conditions, right? You don't just say, oh, I get in when the short MA crosses, when the short MA is crossed over the long period, you know, that kind of thing. That's not a rule. That's a strategy. Which is okay because rules are made up of strategies that are foundational on conditions. You can go down the rabbit hole of defining things, but if you don't understand the definitions, then you're going to do stupid shit and you're not going to make any money. So I mean, I've done plenty of that. Well, today that was a stupid shit move. I didn't follow the conditions of the rule that gave me the entry signal to hit bid ask. So I mean, I'm not crying about it. But when you take a 0.3% gain and pass up on an 0.8, that extra 0.5% is on a 10 lot is $500. So when you're looking at kicking out of your trade, you have to make sure as you're developing your trading rules that they encompass that waiting period. Not only waiting for the price action to manifest itself so the conditions of the rules say, yeah, take the trade, but the conditions should also lay the groundwork for, well, where do you expect this fucking thing to go? I mean, that's part of your entry analysis. And that's based a lot on the momentum that price action has and is expected or probabilistically expected to continue once the price gets going and it's fulfilling the conditions of your entry. So that's a waiting process as well. So you're waiting until you get your entry signal for your bid ask, and then you need to wait for the price action to mature within the boundary conditions that your conditions indicated the trade was capable of going in. And so that's the part of the condition of that rule that I violated, and I took the 0.3% instead of possibly getting 8 or 0.9%. I mean, that's a huge win on a per trade basis, right? So the follow your rules is not only valid, but it has to come with a caveat. You got to have the right rule. And most folks that I talk to don't know how to create a rule. They don't know how to create a trading rule. They listen to some fool saying, oh, you know, when the RSI does this and the Bollinger Band is here and these fucking Fibonacci numbers, you have a 63 point whatever, you know, that's the bounce point and all this just stupid shit that's out there. That's not how that's not how those guys are trading. What they've done is they've traded, they've got beat up, they lost. Some of them have lost tens of thousands of dollars, hundreds of thousands of dollars maybe, in order to learn what not to do. But they've gone through a process of just running through a minefield and getting a leg blown off and then run back through the minefield and it explodes and knocks you out. So nothing that kills you. But when you get to the other side, when you finally run through the minefield and you get to the other side, you don't really understand how you got through the minefield. You just didn't hit a mine. So if you do that enough times and you're lucky enough not to get wiped out to the point where you don't have enough money to reload your bank, then you really don't understand the mechanics of what not to do to be able to explain it to somebody else. So for somebody to put this crap out about Bollinger Bands, that's not how they finally figured out how to trade, because that stuff has nothing to do with trading. That's the toughest job that I have as an educator when I'm working with somebody, consulting with them in my course, to get them, get that out of their brains, is that all that shit has nothing to do with trading. First, you learn how to trade. First, you learn about price action. First, you learn about the market that price action consists in. Price action in a car sales market is different than the price action in a commodity market or the currency market or whatever. It's secondary to learning how to trade. If you don't know how to trade, then you're not going to be able to learn how to trade the Forex market. So when I start somebody out, regardless of their experience, I want to make sure that they understand trading. Because a lot of folks that I talk to have never done anything like this before. You know, they're just coming in because their friend does it or they saw it on YouTube and they thought, well, that's an easy way to make money. I'll just sit there and hit bid ask and collect my cash like these guys. Because when the short MA crosses the long MA, I go in, and when it goes the other way, I get out. Pretty simple. Oh, and I got to throw a Bollinger Band in there and maybe an RSI. Oh, okay. I got three things that I'm going to be considering. Little do you understand that those three things create 19 different permutations of execution and thought process in order to determine what you're going to do. And if you don't understand that, you're just going to mix it all up. Now, you may get lucky because of all this. They talk about confluence of all this stuff. But instead of worrying about all this confluence and having to sit there wringing your hands over all this shit, why don't you just learn how to trade? So that's the first thing that we have to establish. And if you've done some trading before, not that you know how to trade, but you've done some trading before, and I generally work with folks that have 6 months to a year of live account trading, maybe 50 to at least 100 trades, maybe 200 trades executed, so that they've been around the block. They've seen this shit. And so when I say, oh, okay, let's forget about Forex for a second. Let's think about what trading is. Then let's take a look at price action. And after we do that, let's take a look at the Forex market and what causes that price action. Because that cause of that price action creates the boundary conditions of what our rules will be built around in order to make money. It's I should probably do a video sometime and lay all this stuff out, because it's really critical in understanding how to put your money to work for you. And will you lose? Yes, you will lose. But the goal of the thing is lose less than when you win, that you win, and win more times than you lose. So there's some factors there that are involved in how you develop the skill in order to do both of those things, and in the correct sequential order of learning how to do them. Because if you mix up the order, the tendency will be for you to do what I've called in many of my videos anticipatory trades. That's where you go in and you sit down, you look at the trading screen, and it's showing that a trade is almost ready to go, that it's cooking. And so your conditions or your rules are saying that the price should go to there, that it's got the momentum, and you tick off all the boxes on your entry conditions, and it should go there. But it may not be ready to go there now. If you don't have the proper condition in your rule, then you'll say, well, instead of waiting for price to get to here where it would be proved itself that it has the momentum to move in that direction, I'll get in now because I can make an extra 8 pips. And so I'll make the 8 pips there, and then I'll make the 20 pips that it goes to the profit target. It's 28 pips. That's a great day. But that anticipatory move of going in too soon, the price hasn't established the condition necessary in order to go in at that point. The probability is that there will be a retracement of that price, even in that 8 pip distance that you think you're saving. A retracement of 5 pips, 6 pips, 20 pips before it builds up the base of order flow that you don't understand because nobody's talked to you about the market itself, to build up enough momentum, dry powder in that price action in order for it to continue in the direction that you want it to continue in. We all suffer for that. We all want to get into that trade and make those extra pips, but you have to be patient, right? So when you create your rules, you have to have the proper conditions that keep you out of the deep shit and provide you a probabilistic advantage to when you make the decisions that you need to make. When do I get in? And when am I safe in order to do that? So I've got an entry condition that says, oh, okay, all these conditions are ready so that you could make the trade. When do you make the trade? See, you've got the what do I need to do, how do I need to do it, and when do I need to do it? So the conditions of your rules have to answer all 3 of those questions: what, how, when. And everybody that I talk to who emails me or we get in a video conference has no concept of the difference between the when. Nobody's ever talked to them about the when. Everybody only talks about this is what you do and this is how you do it. And they'll say, well, when the short MA crosses the long MA, but that's not a when. It might be a condition of how, but that's not the when. That's not when you do it. So that's really tough for me when I talk with folks that are thinking about taking a course from me, that they really buy into this and they understand this. Otherwise, I won't take them as a student. I don't have many students. I don't want many students because I spend hours and hours with my students. I'm retired, and I'd like to communicate with folks for a long period of time. I've been in martial arts for 56 years now, I think, 57 maybe. And I have students that have been with me 50 years, 55 years. And they're not learning, we're communicating. We're similarly excited about the martial arts market and the philosophy behind it. And we have a community. Some of these guys that are selling courses, we're going to have a community. Well, they got a Discord group and everybody comes in and you got a bunch of people that don't know what they're doing, offering advice to each other. And unless the coordinator of the Discord is there to tell you that you're full of shit, it's just, you're no better off than just going out into video land and watching stuff. Those things don't do any good. Those aren't communities. You have to understand what a community is. It's not just a bunch of people that are struggling to learn something and sharing information. Well, you can do that if you're in a community that's learning how to build YouTube channels or how to make your law practice a better work environment or whatever. But this is serious stuff. This is your money that you're supposed to be making for the security of your family, and you're in swapping ideas back and forth with people that are at your own level. The people that are advanced enough aren't going to be in the community because they're too busy working the plan. Man, there's so much disinformation out there. I wish that I could expel it all, and I've tried to in my videos. I get criticized because not many people criticize the way the education is being presented, the way the information that's out there is being presented. It's very difficult for me to not point that out. And the few people that do go, maybe this guy's got something. Well, they send me an email and we talk about it, and maybe I can help you in a couple of emails, or we'll do a video conference or something, and you go, oh, that sounds like a pretty good idea. Well, great. Good luck. But if you're really excited about the currency market and you're not able to put all these pieces together, then we could talk about taking a course. It's expensive because it's going to get you to job replacement income. That's what you're trading for. What are you doing? Trying to trade to pay your light bill? Well, maybe in the beginning, that's what we'll do. We'll trade to try to pay your light bill. But that's not why you're going to take a course from me. I'm trying to give you the skills and the process. The process, that's the key to building good rules with great conditions so that you have full confidence in your ability to make profits so that you can replace your job income and you can be basically like I am, retired. So in your striving to be successful at your trading, whatever rules you have, follow them. Don't make shit up on the fly in real time. Because if you're failing with the rules that you have, it's not about you, it's about the rules. And so you have to fix the rules. But you built the rules with full expectation that the rule would work, and unless you listen to some dumbass and they gave you the rule and then you go, oh, okay. But you don't, there's no way that you're going to be successful doing that. You have to build the rule. When I teach my course, I'm not building the rules for you. I'm showing you how to build rules and what to look at and what I look at, what's important for you. How are you going to do this? What's your patience level? Are you going to want to continue to day trade, or are you going to eventually want to use your day trading skills to move up and do position trading? Well, that's great, but we learn this stuff. I got to know that so that we can communicate so that the rules that you're building fit you, not me. You're not going to be able to use my rules. So in your trading, the statement of the video was follow your Forex rules. And if they're not working for you, then you got to figure out what part of it isn't working for you. Don't throw out the whole rule. You don't throw out the whole strategy, the whole methodology that you're trading and go find somebody else to copy their stuff from. You got to take those rules and figure out what's wrong with them. And if you can't, then you really don't understand trading. Because if you did understand trading, you could figure out what the rule problem was. Be very, very careful about who you listen to, and be very careful about the information that you consume. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day and a profitable trading day.